This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Well, hello and welcome back onto the Research Talks here from Stockbox with Alan Green and Dan Flynn. So, how's the week been? Dan, how have you been getting on so far this week? I'm seeing a lot of some things in the air, I think. I see, crypto's doing all right. Oil's actually shot right up. I'm just looking this morning. Gosh, inflation's back. Is it 6% up this morning? Back at over 72. Wow.
Yeah. I think I think there's a little bit of uncertainty in the air with the escalating conflict between Israel and Iran overnight. Like you say, that's having an impact on two of the assets we cover quite regularly on here. Bitcoin dropped off from around 110 to 102. I think when I looked just before we recorded, it was back at 104. And gold, the flight to safety is already started and it's ramping back up to close in on all-time highs at around $450 an ounce. So, overall the week's been great, but I think this thrown a bit of a spanner in the works over the last 24 hours. So it'll be interesting to see how this situation between the two countries unfolds. I'm sure we'll see more price swings. And I think for the Bitcoin maxis out there, it'll probably be viewed as a great time to buy the dip, won't it?
Absolutely. Yeah, a good time to buy the dip. Of course, we've got Binance who've opened their wrap offer. So that's basically allowing retail to participate in a raise that they'll put it straight into the Bitcoin treasury. So
yeah,
quite a nice little time if it's pulled back a little bit, as you say, chance to average down a bit.
Yeah, good timing for them, I think.
But Alan, how have you been this week? What have you been seeing on the street?
There seems to be there's a sense that there's a real uptick in activity, and it's not one particular thing. It's a series of events. But I was up in London yesterday, spent some time at the City Club, and then went down to a favourite haunt near Cannon Street, and just talking with some brokers and people in the markets there is a sense of optimism. And I think I was chatting with one broker, and he said that there's a sense of optimism in the market, but what they're waiting for is to see 2 or 3 big M&A plays put out there, because of course it's well known that small caps, micro caps are having difficulty raising money. In fact, in some cases, they can't raise money, so they're effectively grinding to a halt. But that in itself creates an opportunity for the bigger players that do have cash flow and do have perhaps a bit of a war chest to go out there and make a play. And as soon as that starts to happen, then of course everyone's going to start speculating again, and it's that sort of speculation that drives the market. But certainly that seems to be bubbling under at the moment. So I guess just watch this space, and as soon as we start to see those stories, some takeovers or M&A activity in the market, then I think we'll see things really start to pick up.
That's very interesting that you're saying that, because I've been feeling it as well, and I think a few people have, and it's a bit strange, but you sort of just start to feel it in the air. I said, I think, on a few interviews I've done with AI companies and Bitcoin companies recently, that there's a lot more noise coming up in generally. I don't know if the miners are going to benefit from this. I sort of obviously hope they do, because that's where I'm sort of more interested. But definitely there's more general noise anyway. We've seen these treasury things being announced from various crypto companies, and even mining companies now announcing Bitcoin treasury strategies.
Yeah.
But you're just seeing more on your places like your LinkedIn, your X. You're seeing things pop up. There was definitely more noise going on. There's sort of something in the air. So it's really interesting that you sort of felt that really at the coalface, let's say, talking to people in real life in London who are in the city. So it's not just something that, we're getting like we're seeing things that aren't really there. It's nice to hear you've actually getting that vibe firsthand from people in the city. So that's very nice. And of course, it's June and you're going into summer, and it's very warm today, as you were saying. It's also about 28 degrees. So we are in the summer, which is, of course, generally a market malaise.
Yeah.
But at the moment, it doesn't feel like that. It actually feels pretty exciting. So who
I
knows
agree.
what the summer will bring? But if the summer is just a charge-up period, and we hit the autumn, I'll be very happy with that, with a bit of a bang.
Well, I can remember. I think it was 2003. We had the dot-com boom, and that it was really starting to pick up in May. And of course, the usual adage "go away in May" was
Yes.
completely redundant that year because the market's just powered through the summer. And if there is a pickup, it's not going to wait until September. I think it'll just blitz on through. So we could be right at the start of that now, which would be really exciting. But I think also you've got the underlying drivers. Of course, the gold price is incredible, and one of the companies we're going to talk about in a second actually has been driven completely by the outperformance of gold. And then, of course, as you were saying just now, that Bitcoin Treasury, so you've got these instruments that are underneath the market, underlying the market, that are actually burgeoning in value and bringing value to some of the stocks in the market that have an association with them. And they always talk about a lag between perhaps the underlying commodity going and then the stock catching up, and perhaps that's part of the process. So we're going to see perhaps some of these gold miners and other stocks start to close the valuation gap.
I hope so. Do you know what I'd like to see? I mentioned to someone the other day, a mining company who are into gold is forming a gold treasury. I think that would be pretty cool. A Bitcoin obviously is also cool, but it's kind of trendy at the moment. But I think if a miner in the gold space actually announced a gold treasury, I think that I've never heard of that before. I think that would be quite cool.
Yeah, I agree.
Anyway,
and also companies, which could be on the cusp of moving from exploration and production, and on a small scale, ECR are very much in that space too, aren't they? With Blue Mountain, potentially, Blue Mountain comes into production, you start to generate value because you're producing gold. It just moves the company onto a completely different plane, and of course the value proposition changes too.
Indeed. Well, just quickly, because you mentioned ECR, I'll just drop. We are doing a live Q&A in Telegram next Thursday. So that's Thursday the 19th at 5 o'clock UK time. So that will be with definitely Mike Whitlow, and I think Nick is joining as well. So that is the opportunity for investors to listen in. We'll have questions. We're advertising now, so questions are coming in. Get those questions to Mike and Nick, and you can listen in live, and you can ask live as well, either verbally or by typing. So first time I think we've done that with ECR, so it'll be quite good. I know you're pretty keen on that group, Alan. So hoping you were tuning in as well.
I'll be tuning in too.
Good. Well, we're going to talk about a couple of companies. We're going to cover Sunday Bar, which is an AI company that had its admission to AIM about a week ago. A good interview out with Stopbox, sort of a longer format sit-down interview with CEO Jill. And we're going to cover them today, as well as Barton Gold, who had some recent news as well. I think we're trying to line up an interview with CEO Alexander Scanlon. So that's basically, a tech play and gold, so quite topical, really. But Sunday Bar first, Dan. What's your take on it, having researched the company, and I'd like to know what you think about it.
Yeah, so it only came to market a couple of weeks ago, so it is a very new company. But having read everything it's put out and watched your interview with the company's CEO Jill, Mark, I think the opportunity it presents is pretty unique and significant. And it also centers on some pretty exciting new emerging technology, which many won't have heard of. I know I certainly hadn't until a couple of weeks ago. So I think it's worth perhaps going into the background here before we start looking at the company itself.
Mm-hmm.
So in a nutshell, Sunday Bar has developed a marketplace that connects developers and users of these pieces of autonomous software called AI agents. I think the best way to describe AI agents is probably as apps on steroids. So where traditional apps wait for you to click a button or provide detailed instructions before they do anything, AI agents are entirely autonomous. You give them a prompt to complete a task, and they do it proactively without any oversight, make decisions, take actions, and adapt based on new information themselves. So there's lots of techie words there. But in simple terms, using the example Jill gave to you, Mark, imagine you owned a company and wanted to roll out a social media strategy. You or a colleague could spend time learning how to do it and then doing it yourself, or you could hire someone else. Or you could purchase a social media AI agent, tell it what to do, give it your logins, and it'll get to work on making posts, creating content, monitoring engagement, generating performance reports, all that stuff. And you, meanwhile, are given the end product to do with what you will and freed up to focus on other tasks in the meantime. And it's that increase in productivity that stands to make the AI agent market so valuable, where the space was worth $5.1 billion in 2024, so last year. Forecast Sunday Bar put in its press release puts its value at 47.1 billion by 2030. So that's a compound annual growth rate of 44.8%, which you won't find in many areas of the market today. And it's over a very short time frame too. If it continues that growth trajectory into the 2030s, then it will truly be massive. So that's the wider macro trend here. And what Sunday Bar is doing is leveraging this market opportunity by filling in the last remaining piece in the jigsaw puzzle. And that is access. So while developers are already building these incredible tools, users are struggling to find what works for them because AI agents are disparate at the moment. They're located in silos. There hasn't been a centralized marketplace to maximize awareness. I guess to compare, it'd be a bit like if there was no app store and you had to proactively go out and find an app whenever you thought to yourself, I wish there was an app that could do this. You probably wouldn't do it because you wouldn't even know if a solution existed if it did. So Sunday Bar has addressed this by creating the first marketplace for AI agents. Developers list them and users can find the one that meets their needs. I think Jill described it to you like a matchmaking service, Mark. You tell the company's platform what you do, how you work, what you need, and then the platform shows you the tool that can help, be it a writing assistant, a market research tool, hiring tool, whatever. That's it just puts you in touch with the right product. Perhaps I know you did your interview, and I think you said you have a clip. Perhaps now would be a good time to hear from Jill herself.
Yeah, let's have a listen to the clip. This is a clip from the longer form Sit That interview.
So, I think in general, the AI space is really shifting from experimental to mass adoption. And I would say early stages in that. In many ways, it still is in experimental. And then the AI agents are definitely in their infancy stages. So they are already capable of executing end-to-end tasks. I mean, you could have an HR agent that you prompt, and I really think we need to think of these as like co-workers. So if you were going to hire a junior HR employee to execute something for you, and you said, I need a head of social media, I need them to, work in the UK, I want them to be part-time, they need to be able to create content for social, create captions, monitor, track, etc. What we see with agents is you could have that as a social media marketing agent. So that agent, you can prompt it, so you can give it your brief on what you want for your marketing. You have to give it access to all your social handles. If you want, you could give it access to put paid behind that content and then run monitoring reports. And so the reason why I say it's still early adoptions, because it's still hard for people to wrap their heads around that. And there are agents out there already. I mean, hundreds of thousands are being developed now, but their capabilities today versus what their capabilities are even going to be in September are incredible. Okay. And I think we don't even quite understand how it's going to positively affect how we work.
Right.
Because we've been stuck. Like when we created this marketing campaign, these are our version of agents behind us on the screen. We see them as like very dynamic they move together, they work together, they work with you, they're accessible, etc. How we were like, okay, so once you have your agent, like it's like your cell phone. This is the technology. All of a sudden, it's with you all the time. Like when we all got our iPhones or our Samsungs or whatever phone you got, that became your way of working and your way of connecting. And then we created this campaign because agents are sent you prompt, and then you can go about what you're doing, and they go to work. So you'll see in some of our marketing coming out. So say if we're in an interview here. Essentially, before the interview, you and I could have both prompted our agents, whatever they are, and then they're working behind us. So we can focus on this interview. If you're training for a marathon, you could prompt your agent and then, run. So in everything we created, unless you were like trying to hit a deadline, all of our imagery, people's heads were up. And I think that's really important to think. So our heads have been down in computers, and now how do we allow computers to work for us, and we're shifting our ways of working.
So do you think AI will replace humans, or
not at all? I think
make us
it's
more efficient?
More efficient. They're complementary. Like we really see them as like complementary to your workforce. So all those tasks you do, whether you're like going through LinkedIn to try and find a right candidate, like searching, there are tools out there that can help you. I think it's going to open up creativity and innovation, and they're companions, they're co-workers. They're not replacements.
What would success like for you, or what would you like to achieve, or perhaps leave as a legacy? I know you just started, not saying under leave soon, but sort of leave as a legacy for Sunday Bar.
I think having Sunday Bar be recognized as the platform that was integral in deploying this new wave of digital workers commercially to the market would be a really big one, and to have it as a trusted place for people to discover like what AI agents, what digital workers they're bringing into their teams.
Great. Well, I'm quite excited. It sounds like we're at the
Yeah,
start of
it's
something
exciting.
Yeah, okay, well, there we go. I did like what she said about people's heads have been down in computers, and this will sort of put them up. I thought that was a real nice sort of analogy to make. You get your
I agree.
I know the computers have always worked for you, but you've kind of had to be with them, unless you can set it doing something like exporting a video, and you can then go and do something else while the computer works. But if you can actually get them doing specific tasks for you whilst you're doing other stuff, because I think the key question as well was, will they replace humans? And I think to some degree they will. Like robots replaced people on production lines, for example. But it makes us more efficient. It's progression, isn't it? And if you can transfer your skills from being the person who assembles a car to being the person who actually can operate machinery or program machinery, then it's progress in the world, I think, and you have to move with that progression. Don't get down about it, and use it to your advantage. Try and make yourself more productive and use your time more effectively. So, one day they might take over everything. I don't know, but I did like what she said. I think it's the start of something pretty cool. And then if it goes to some kind of crazy dystopian time, well, so be it. But
we can worry about that in the future.
Worry about that later.
Yeah. So I agree. I mean, the potential is enormous, isn't it? It's like one of those big shifts that you maybe in a few years will look back and think, Christ, how didn't we see it coming? But for now, Sunday Bar has already launched the beta version of its marketplace platform, and over the coming months, it's using the money it raised upon coming to market to build awareness, generate interest, and expand its capabilities. Probably worth mentioning at this point that Jill's background is in marketing at Red Bull in Canada. We all know how effective that company is at creating a brand that extends far beyond its product. So the goal with Sunday Bar is to create a network effect. So that means more developers, resulting in more agents, more users, and the cycle repeats. Similar to what Shopify did and continues to do to great effect in the e-commerce space. And Sunday Bar creates value by generating revenues from monthly fees paid by developers to list agents, commissions on sales, and promoted listings. So, like we were just saying, it's pretty early doors here still, but Jill said to you that Sunday Bar expects to enter revenue generation over the next 12 months. It's not too far in the future, so we're looking at a real business use case for AI here. If the company can achieve that network effect in a meaningful way, number of developers, AI agents, and buyers grows, then you could really see those revenues start to scale. I mean, that's basically how Amazon and the other retail giants we use every day without even thinking about it today got started. And of course, there's no guarantee that Sunday Bar will replicate that success. But if the AI agent space heats up, like the forecasts are projecting, the company establishes itself as the de facto platform for selling and buying AI agents, then not only could it be huge, but today's valuation could represent an excellent opportunity to get in here on the ground floor.
I agree. A good opportunity to get in on the ground floor. And like you say, it's ready to go now. It's a real live marketplace. And Jill's background in marketing at Red Bull, I think they're going to really be going hard at this. So it's a good, nice AI play, I think, to keep an eye on, an AI with real utility. So yeah, it's nice. It's good to see it listed on the LSE there. Well, thank you, Dan. Let's talk about Barton Gold now. Then, of course, a gold company out of Australia, run by Alexander Scanlon.
Absolutely. So Barton is a company I've covered on here before, Mark, and I think it's one we both agree looks really promising.
Indeed.
I know you have an interview teed up with Alex, the MD, next week. So I thought today would be a great time to quickly go over the investment case here in light of the company's recent news flow. So Barton is a gold explorer and developer focused on the world-renowned Gawler Craton in southern Australia. And since we last covered the company towards the beginning of May, there have been a couple of really exciting developments. First, Barton has accelerated exploration at its Tolma property, which is located within its Tarcoola project. So Tolma started life as a high-grade gold exploration asset. But earlier this year, Barton hit a pretty astonishing silver discovery at a new zone within the prospect. It reported a single line of 7 discovery holes with 3 silver assays ranking among the highest in the world. And that's not hyperbole. One was 7,600 grams a ton from 46 meters, while the other 2 were over 3,000 grams a ton. What Barton is doing now is rapidly increasing the rate at which it is following up on this discovery with drilling. And its goal is to really lock down what sort of opportunity it's looking at here. So a 2,500 meter RC drilling program to define both the new silver zone as well as the existing high-grade gold zones began a few weeks ago. But earlier this week, Barton announced that based on further work in the field and early observations from drilling, it's decided to focus all of its RC drilling on the silver, swapping out 7 holes planned for the gold with 8 more for the silver. The goal is to gather a larger amount of data on the silver with the remaining time in its current program. So the company hasn't explicitly said what it's found yet, but I'd say that's pretty bullish given the grades it's already identified. And with drilling due to finish this week, followed by expedited assaying to get on with follow-up drill programs as soon as July, it seems likely that we'll find out more about this exciting silver opportunity at Tolma soon. So moving on from that, and Barton's second big development has been the completion of a 3 million Aussie dollar placing at a premium to its market value, led by established Australian resource investors, some existing, some new. So this alone is a big endorsement for the company. It also reduces dilution and puts Barton's cash balance at a healthy $9 million. Most important, though, is what the money will be used for. And to understand that, I just need to jump back a bit quickly. So Barton's Tarcoola project, the one with this Tolma Silver project, also contains a number of mineral leases with fully permitted walk-up restart mines that can be almost instantly brought back into production. It also hosts the only gold mill in the region, which is fully permitted and owned by Barton to boot. Barton's goal is to use these leases and its mill to move into low-cost production by mid next year. scaling up to production of as much as 50,000 ounces of gold a year over the next few years. So this is why it calls it Stage 1 operation. Stage 2 operation centres on a neighbouring project called Tunkilia, and this is a much larger and longer term opportunity. So the project contains a 1.6 million ounce gold resource, which Barton plans to develop with a series of pits. And last month, Barton released an optimised scoping study for the project, estimating average annual production of 120,000 ounces of gold and 2,050 ounces of silver over an 8-year period, all in sustaining costs of 2,200 Aussie dollars an ounce, total life of mine revenues of up to 4.8 billion Aussie dollars, and a payback period of under a year. What's more, these figures are based on a conservative gold price of 3,500 Aussie dollars an ounce gold. It's much higher than that at the moment, so there's scope for even more upside there. So with all that in mind, what Barton plans to do is use the bulk of the proceeds from its 3 million raise to expedite mineral resource estimate upgrade drilling at Tunkilia. So this will begin in September and will focus on 2 starter pits it's planning at the project. To give a sense of the scale of the opportunity here, consider that during the first 27 months of Tunkilia's production, these starter pits are modelled to produce gold and silver, generating up to 1.3 billion Aussie dollars of operating free cash. So that alone would pay back Tunkilia's estimated initial capital cost 2 to 3 times over. Really, it's just the start of the project. So yeah, I'm really interested to hear what Alex has to tell you about these 2 drilling campaigns, the one at Tolma, the planned one at Tunkilia. I just think the company has so much upside at its current 189 million market cap. It's got the funding, the assets, the opportunity for near-term scale production, and all at a time when gold prices are so high. So as the company shifts into producer status, you might expect to see it re-rate significantly higher. I don't know what you think, Mark.
Well, yeah, I would hope so. I've always liked Alexander Scanlon and his real long-term planning and thinking out of the company. He's thinking sort of years in advance. Gets these long lead time items, as he calls them, i.e. environmental studies, etc., gets them going now, even though it's, a long way from I say a long way, a few years from being sort of required to actually get into production, but he's starting those processes now so that there's no to smoothen out the bumps, I would say, along the road to production. So yeah, he's going about it the right way. There's a lot of institutional money backing him on the company, and yeah, it's just cracking on, isn't it? So we'll have a chat with him next week. We'll get an update. If you've got any questions for us, Dan, let me know, or anyone listening. And
absolutely,
we'll ask them to Alex and see where they are. But I've always liked the story since I first was introduced to the company a few years ago in London, and they're just carrying on doing the right thing. Got the money, they've got the asset, got the mill, as you say, and they can just go down that path to production effectively, and make some money through the selling of the yellow metal. So yeah, it's a good little story, I think.
Yeah, it's got a great narrative, hasn't it? It's very clear on what it wants to do, and I think that's kind of rare in this market sometimes.
It's rare that a CEO seems to actually have a long thought out plan, and I think it's perhaps I think it's a big, huge project. It's probably not going to be super exciting because I guess they've already got their deposit. Of course, they're going to prove it out a bit more and build that resource and that plan. But it's not like it's grassroots exploration where you've got the sort of excitement of a drill hitting. But the market cap reflects that. It's less risk and sort of slightly less excitement, but something to maybe scale into, maybe if you want some exposure to an Aussie gold company with a good forward-looking plan and a good deposit, and just sort of scale into it over time and as it moves to production. It's perhaps something to consider, I'd say.
Definitely. Yeah, looking forward to your interview.
Ramsdens Holdings, never heard of them, but keen to hear what they are all about. And Premier Miton, of course, I have heard of. I do like Gervais. I've interviewed him a couple of times. So, of course, you can indeed buy stock in Premier Miton itself. So, I want to just get your thoughts on that. But I think Ramsdens Holdings to begin with.
Ramsdens to begin with, yeah. So Ramsdens Holdings isn't, as we were talking about earlier, the Harry Ramsden's fish and chip shop. Although I think the corporate colours are quite similar, so perhaps people have mixed it up in the past. But Ramsden Holdings, the EPIC code is RFX, and they are a chain of pawnbrokers that provides a very solid and good foreign exchange platform, and have a number of strings to the business where they operate the pawnbroking stores, and then of course um, the when the gold crash took place a few years ago, the company decided then to diversify and start buying new and second-hand jewellery, and also providing pawnbroking loans. Now, the chief executive, Peter Kenyon, has been with the company since the start. He owns about 3.6% of the company. So, people who like to buy a stock where the CEO and the management have skin in the game, this is very much one of those companies. But just looking at the results from last year's we're just seeing this sustained period of growth driven by the gold price. And no doubt, if you listen to commercial radio, you'll have heard some of these pawnbroking companies or jewelers offering to buy your gold because of the gold price has gone galactic or whatever. And of course, this is an incredible store of value for them. So we were talking about miners perhaps operating their own gold treasury. In a sense, Ramsden Holdings is very much that a model in that ilk. In that, of course, they have this huge store of gold, and they're sitting on these gold assets. They're buying the gold assets, and the gold is just continuing to go up in value. So to date, the company has 169 stores across the country, and obviously there have been issues with costs and various other things. Of course, the increase in national insurance has weighed somewhat on the company, but the company announced a really strong set of full year results in January this year. That's full year up to the end of September 24. Now, revenues increased 14% at this point to 95.5 million. And that's, if we go back to the interims last time, revenues increased 12% to 43.8 million. Gross profit was up, pre-tax profit up 12%. Net assets grew by 11% to 53.5 million. And the company also pays a dividend too, which is a major consideration. And I think when you've got a company that offers the capital gain as this one does, I mean, it's delivered a pretty spectacular return for investors so far this year. Shares were at this time last year, we were looking at shares trading at 198 pence. They're now trading at 345 pence. So that's well on the way to doubling over the year. They have been as high as 360 on the year, so just off that year high now. But certainly an extremely solid performance, and backed up by this dividend. But the CEO, Peter Kenny, said the very strong performance was driven by the gold price. But if you break down the growth in the different businesses, the Forex business grew by 4%. That represents 14.2 million in terms of revenue to the company. The pawnbroking business up 16% to just under 12 million. Jewelry business also up 10% too. The company also opened a new head office during the period, and they're starting to really streamline and maximize operational efficiencies within the business. Then we come to this month. The company has literally just announced interims up to the end of March. So remember last year, at the interim stage last year, revenues had grown 8% to 4 million. Then at the full year, revenues have grown 14% to 95.5 million. Well, interims to 31st of March have grown 18% to 51.6 million. So the company is on track for turnover or revenues of well over 100 million this year. Gross profit at the half year stage up 20%, and these numbers have all beaten previous numbers comfortably. Pre-tax profits up 54% to 6.1 million. So that's compared to 12% increase last time, and and an 8% increase this time last year. Net assets now just under 55 million. So the performance has been so strong, the company decided to increase the interim dividend by 25% to 4.5p and pay a special dividend of half pence too. So your shareholders in this business are getting very much rewarded for sticking with the company. And indeed, if you bought the company last year at just under £2 a share and you got that dividend too, you'd be looking at a pretty substantial gain on your investment within the year. So despite the cost pressures of national insurance and everything else, the company expects full year profits to exceed, pre-tax profits to exceed 15 million. So at the half year stage, we're at 6.1 million, full year profits to exceed 15 million. That means the full year performance is going to increase yet again. So I think there's every reason to buy the stock, even though it has delivered a substantial gain already. I mean, if you wanted to wait until ex-dividend date, I think the ex-dividend date is in early September, so you could wait until that time and perhaps buy the stock then, see how it does. But either way, I think this is a very valuable addition to your portfolio, and also, as we were saying, Mark, it does provide that it provides that gold treasury element that a lot of investors are looking for nowadays.
So it's interesting because it looks like it's a pawn broker that also does financial services as well, it seems, as well, and foreign exchange, that kind of thing. So it's, I don't know what the word is, like a pawnbroker on steroids or something. I don't know. It's not your typical pawnbroker on the corner of the street, is it? It's much more than that. Yeah.
But
the gold treasury. Sorry, go on.
Yeah. I was going to say the reason that it diversified into foreign exchange and then pawnbroking, loans, and jewelry is because of the crash in the gold price in 2013, and that at that point the company it triggered this diversification, which of course is now paying off handsomely. Right. On top of which the company is benefiting from this incredible run in gold.
And their gold sort of treasury then. So obviously they will buy gold in jewelry form from people. Are they also buying the physical in terms of, I don't know, coins or bars, or are they actually building a treasury, or are they sort of just, are they holding it? Do you know what their strategy is when it comes to the gold treasury side of things?
Well, I think they'll buy the gold and they'll sit on it. They may sell some of the gold off. They may and of course they provide pawnbroking loans. So some of the people will bring their gold in and they'll borrow money against that asset. So it's used in a variety of ways. But I think when you look at those numbers, I mean, really, over the past 2 years, they've just grown revenues, grown profits, grown the net asset base. They've increased the dividend all the way through. So, and at the same time, they're increasing efficiencies. So arguably, you could see it may get to a tipping point where the economies of scale start to deliver even further improvements in those numbers. So it's an exciting business, but some of that success is already in the share price. But I think, as we often say, the trend is your friend, and certainly given where gold is going now, it shows no signs of slowing down, and I think a lot of people think it's going to just carry on powering up. This is the sort of company that provides exposure and is in effect a proxy to that growth.
Good. Well, thank you for that, Alan, for introducing. So it's Ramsdens Holdings. Nice little one to consider there. So Premier Miton then, the investment fund. Yeah,
Premier Miton. So long been interested. I will declare I'm a shareholder here in Premier Miton. So AIM-listed Premier Miton, of course, it's an active investment manager, and it offers a range of investment opportunities, funds, investment trusts, investing across equities, fixed income, sustainable ESG investing, multi-asset investing, absolute return bonds, and a whole range of stuff. But I think they're also known for investing into smaller caps as well, and being solid perennial supporters of the small cap sector. Indeed, Gervais Williams, the head of dealing there, has said on a number of occasions that he believes the AIM market and small cap stocks are materially undervalued, and certainly he's very highly regarded throughout the city, and I think what we're seeing now in terms of share price performance is some of those views starting to manifest themselves on the balance sheet, because certainly the improvement since April this year, and he was talking about it sort of during the first quarter of the year, has been marked. So the company has provided a couple of updates. I mean, really, the news comes when the company provides its financial updates, so you can get an insight into how the business is progressing forward. So the company provided an update on assets under management in April. 10.2 billion assets under management at March 31st, 220 million net outflow, which included 175 million for one European equity fund. And then in the interims to March 31st, which the company announced a few weeks ago, the company cited this continued resilience that it was offering with that those assets under management. The company's got cash of 31.2 million, of course no debt because it's a fund. So and that sits against the market capitalization, which is currently at around 116 million. It's also identified 3 million of annual 3 million in annual cost efficiencies that will be saved as it goes forward. So again, as it grows, it's able to improve on its operational efficiencies and deliver those sort of savings. Adjusted profit before tax of 5.5 million, and again, interim dividends paid out of 3p. Company goes ex-dividend on July the 3rd. So if you're keen to get in before that date, then that's a date for your diary. Across the portfolio of funds, 71% of its funds are outperforming respective sectors, and indeed 70% are outperforming in the current year to date, which is really sort of is an up to date view of overall of the company. Of course, the chief exec, Mike O'Shea, said the company's was very encouraged by the strong demand for the absolute return strategies, and this robust performance they expect to continue, and they're just seeing this very strong new business pipeline continuing despite challenging market conditions. But if indeed we are seeing this uptick, as seems to be the case, then Premier Miton, I think, will be in a very good position to take full advantage of that, given the investment strategies that they employ.
Good. Okay. Good. Yeah, they're in a fair bit, aren't they? So it's a good, typical, I think, model for an investment fund. As you say, fixed income, bit of risk in there as well, and a lot of kind of safe and predictable stocks as well.
Yep.
So yeah, as I say, interesting. I do. Gervais is the chairman, is he?
No, Gervais is head of dealing. The chairman is chairman is it's Robert Holdsworth, isn't it? Is the chairman, and Mike O'Shea is the Robert Colthorpe, not Holdsworth. I got Holdsworth.
Okay, yeah.
But he's he's the chairman of the group, and of course Mike O'Shea is the chief executive. But it's just it's a solid investment platform and investment manager. But I think really with as a big supporter of the small cap end of the market, I think it's it does offer significant upside. And I think if we're seeing this uptick as might be the case, then I think Premier Miton will be one of the beneficiaries of that.
Excellent. Okay. Well, thank you, Alan. Thank you very much. So enjoy the warm weather this weekend. And, well, we'll see what next week brings. We're looking forward to seeing how much Binance, soon to be called London Bitcoin Company, managed to get it in this wrap that they're doing over the weekend.
Yes. Yeah, that's a big move for them, and I think the team there have done really well, and they're doing the right thing too. I think it's a good move to take the company to the next level.
Yeah, absolutely. Okay, thank you, Alan.
Thank you, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.